What does the Fed have to do with interest rates? Why do their meetings have effect on rates? Why do rates seem to react before they even have these meetings? In this video, I'm going to explain all that so you can be more informed and make better decisions for your future move. Hi, my name is Brooks Moore, local realtor of Orange County, and if at any point during this video you have a question, hit pause, drop a comment so I can answer that question. Now, if you want to keep it more personal or just prefer talking over the phone, we have a book a call link in the description below and we'd be happy to chat. Now, let's get into the video. What is the Fed funds rate? The Fed funds rate is a target set by the Feds, often referred to as the FOMC, Federal Open Market Committee, for interest charged by big banks to lend money to each other on an overnight basis. It has several policy tools that ensure the target is reliably hit within 0.25% margin. In other words, the Fed decides, for lack of a better term, what the shortest term loans will cost. From there, the market decides what the longer term loans will cost. Whereas the Fed funds rate pertains to loans that last 24 hours or less. The average mortgage lasts 3 to 10 years, depending on the housing and mortgage environment at any given moment in history. The only potential exception for the Fed setting mortgage rates directly would be certain lines of credit that are based on the prime rate, which does not change with the Fed's hikes or cuts. This is the vast majority of the mortgage market and nothing to do with the dominant 30-year fixed loan. So why do rates sometimes react so much to Fed announcements? The Fed may not set mortgage rates directly, but they can still say and do things that have a tremendous impact on all manner of interest rates. One of the most notable examples is the QE, or quantitative easing. This is the Fed's policy of buying treasuries and mortgage-backed securities in large amounts in an attempt to promote its policy goals. Changes to QE policies, especially when they're unexpected, have a far greater impact on long-term rates than the short-term Fed funds rate. When does the Fed meet? The Fed meets 8 times a year to discuss changes in monetary policy. Apart from emergency, unscheduled meetings, these represent the 8 chances the Fed has to hike or cut the Fed funds rate. Contrast that to the bond market, the thing that actually dictates mortgage rates, which is trading every millisecond. Why do rates often move ahead of the Fed's meetings? Traders aren't going to wait for the Fed to actually pull the trigger on a rate hike if they can be reasonably sure it's coming. Like buying or selling a home, they like to plan ahead so they can be ready for any situation. Indeed, there are entire groups of market securities devoted to betting on the Fed funds rate in the future, incidentally named Fed Funds Futures. These futures typically price in most upcoming Fed rate hikes or cuts with near 100% accuracy. Now, this hasn't always been the case, but it is more and more common in this age of tremendously transparent speeches from Fed members. Now, for instance, if 7 out of 7 Fed speakers over the past month have all mentioned that they're leaning toward a 0.75 hike to the Fed funds rate, it's essentially guaranteed, and the bond market has long since changed accordingly. Because the market can show up to the party so far in advance of the Fed itself, it's not uncommon to see mortgage rates move in the opposite direction of the Fed on the day the Fed actually make its move. The news may not have been as bad as expected, and the market corrects itself. So there you have it. That is what the Fed has to do with rates, why their meetings have an effect on rates, and why markets seem to react before the meetings even take place. I hope this video has provided some value and helps you on your next move. Now, if you're thinking you may be looking to make a move in a month or 18 months, creating a plan will yield the best results. Now, if that sounds like you and you like some assistance, or just want to bounce ideas and talk about the market, we have a book a call link in the description below, and we'd be happy to help. As always, thanks for watching, and I hope you enjoyed.